Times like this in the stock market can be very, very frightening. But let me tell you why I actually love when the stock market is all over the place and when we see these insane dips. I love to dollar cost average and buy way more of my absolute favorite stocks that are now on sale. So today, that's what we're talking about. These are 3 high-yielding dividend stocks that are on sale, and they all offer some insane growth opportunities as well. So I'm very, very excited for this video. For those of you that don't know, my name is Spencer. I talk all about investing in stocks and ETFs, focused on dividends for sure because I love that passive income. But today we're going to go over these 3 of my absolute favorite. Just so you guys know, I do own all of these. So you could say I'm a little bit biased. I've already purchased them. Some of them I've held for well over a couple of years now, and they've been really good to me. So I hope they are good to you if you guys are interested. As always, if you're interested in dividends and making money in the stock market, don't forget to like the video and to subscribe so you never miss future content. Of course, it's all for free for you guys and for me to learn from you as well. Thank you guys so much for watching. Let's roll that intro. Starting with ticker ET, this is Energy Transfer LP. Now, I will say this is a type of stock that requires a K1 form. It's a limited partnership. Just so you guys know, it's a little bit extra to do with taxes. I didn't know that when I first bought it, and eventually I was like, oh, forgot about this. So it does require that K1 form. Now, we can see in the last month, it's down almost 8.5%. And on the last 6 months, it's flat. It's only down 1.15%. Prior to this crazy drop, this thing went on a massive run. It was up 28%. I will say at one point in my portfolio, I was up well over 150%. I believe my original buy-in price was around $7 to $8. And so I'm still above 100%, which I'm happy about, but it just absolutely rocketed, and then it fell off. But let's talk about why. Well, the election results skewed this heavily. So Energy Transfer, yes, it's an energy company, but it also deals a lot with fuel, with providing, oil and gasoline. And thus, when the party switched, and again, I'm not getting political, but when it switched, one party typically favors pushing for the less environmentally friendly drilling and all that kind of stuff. And so a lot of these energy companies did boom because of that. And then they have sold off now because of the fears of tariffs and whatnot. So pretty insane, though. It absolutely tanked, nearly 23% after an insane run. But I really like this one because I do like the energy sector over the next couple of years. And the dividends are consistent, and it's very, very solid. My absolute favorite thing to do with a lot of these plays is look for dividends with consistent growth, and that can be really hard to do, but when you can find them, it's like a diamond in the rough. So we're going to look at ET's website and see exactly the details that make this stock one of my favorites. Here we can see their stock quote data. There's not a lot on their website. The high-low for the last 52 weeks or the last year, the high is 21.45 and the low is 14.60. So we are near the low, sitting at about $16, not quite there yet. The yield is about 8%, which is absolutely insane because when we look at the price return over the last year, the increase that it's gone up, the amount of money that you have made compared to that with the actual dividend yield, it's pretty solid. That's why definitely I am a fan of ET. It is one that I have watched for a long time, but I'll be honest, when I first bought into the stock, I didn't know what I was doing. I was a very, very new investor, and so my 150% return is over the course of well over 5 years now. But it worked out for me. So guess what? Everyone gets lucky sometimes. It was not a skill choice. It was not me diving in and finding a hidden gem. It was luck. And so a lot of people on YouTube won't say that when they get lucky, but I got lucky with ET. So that sounds absolutely hilarious. But all in all, it is one of my favorites. Next, we're going to dive into a dividend stock that also has some insane growth and the most special dividends I've ever seen from a stock. Absolutely beaten down is Main Street Capital, sitting at just under $52. It was over $63, so we've seen a near 18% pullback. Now, look at this. It's still up 8.4% despite a 17.5% pullback. That's how insane this stock was doing, and the dividends are absolutely nuts. If we go to the full zoom out, last 5 years up 98%, averaging a little over 19.75% every single year, or around there. And then the max, it's up 245%. Only been trading since 2007. Definitely started at a bad point in the market, but Main Street Capital Corp is a BDC, a business development company. And I mean, the special dividends from this they're just insane. Like, you probably won't even believe me when I tell you how many special dividends it pays out and how high they are. It completely bumps the dividend yield straight up because they pay them out all the time. Main Street Capital Corp, it's just one that's performed well for me. I like BDCs, like the big thing with dividend investors, income ETFs, BDCs, REITs, maybe LPs or MLPs, but all in all, this BDC has performed well. It is one of my favorite. I own a lot of BDCs. I'm probably a little bit too BDC heavy, but there's just some really cool stuff that you can see. And when you look at BDCs and you look at the interest rate environment we are in, there's some positives and benefits to that. Of course, it's a double-edged sword because one, yes, you're getting more money on your borrowed money because APR. So the money you're loaning out, I should say, they're paying you more to borrow that money. But at the same time, you might have less people, less companies able to borrow because it is so expensive to borrow. So BDCs, very, very solid. Main Street Capital is my top 2 BDCs for sure. Let's check out the website, and they have a ton of details that I'm sure you're going to want to know. We are going from ET that had almost no information on their website about the stock to Main Street Capital that has absolutely an insane amount. We can see cumulative investments is 190. The per share cumulative dividend is $44.73. Absolutely insane. And the capital under management is 8.1 billion plus. A ton of money. So we're also going to throw up the fact sheet, and this is where I'm saying that there literally is a crazy amount of info. So we're going to slide down. I'm going to try and hit the main points. I want to look at the dividend. We can see the dividends with historical growth, and we can actually see it says on here how many special dividends they actually do pay out. But also look at the industry average. Look at, they're all over the place. Geographically, they're all over the place. Very, very well diversified, which I love to see. An average investment size of $21.5 million. Now, the financial performance, this is all really good stuff. We can see how it's consistently going up, which I do love to see. And the total return performance since Main Street's IPO. So you have Main Street, and then the red is the S&P 500, the orange is Russell 2000, and then we have the banking index and S&P BDC index, which is actually down, this purple one. So the index is significantly underperforming Main Street Capital. That is up 1,553%. Absolutely nuts. The dividend, there is data on here. I recommend checking out the dividends for the special dividend info because it really is what changed my mind about this one from going to a really solid pick to one of my absolute favorites. Just because who doesn't love special dividends? For those that don't know, a special dividend, or sometimes called a supplemental dividend, are extra dividends paid out depending on the quarterly results of a company. So Main Street Capital, they do pay monthly, which I also absolutely love, but they just recently, I'm guessing because of the increase in interest rates and the company's just performed really, really well, they've been paying out a ton of these special supplemental dividends to just send more money to shareholders. And that's the thing. That's what bumps it up because I think the yield it's not super high on its own, like 5 to 6%, but with the supplemental dividends, it's up to like 8 or 9. So a huge difference between those numbers. And I mean, you're looking at a 30-40% increase. So absolutely insane. Now we're going to jump into another energy stock. I already explained why I love these energy stocks, but this one is one I think you really need to know about. Enbridge Incorporated, ticker ENB. Now I will say the dividend yield is a little bit lower, around 6%, but it makes up for it in growth. First of all, check out the last 6 months. It's still positive 5%. The last month, it's still positive 2.22%. This thing is a growth monster. Absolutely nuts. Since, even July of 2024, this thing went from 35 up to 43 in that span of time. A really insane 22.6% return without the dividends included. And that's what I love. If you guys don't know, I use DRIP, which is a dividend reinvestment, meaning when you get paid a dividend from a company like Enbridge, like Realty Income, like ARCC, like all these companies, you automatically buy a small portion of a share, or if you have enough, you buy a whole share or multiple shares, again, increasing the next dividend payout that you're going to get. That's how I plan on becoming a millionaire within the next couple of decades. You thought I was going to say years, didn't you? Within the next couple of decades is by dividend reinvesting, using my money to make more money and continuing that process. So the dividend yield is a great key factor for doing that. It's why I primarily invest in dividend producing companies. So Enbridge. Fuel, you can see it says a multinational pipeline and energy company headquartered in Canada. There was some scares with how Canada and the U.S. are going to be working together because everything's been shaky. But all in all, I think they're going to work themselves out. I really do. It's kind of like when mom and dad fight and you're just like, they'll figure it out, Maybe mom and dad's a bad example. But either way, we can see it really has not taken a beating these last 6 months or the last month. It did drop about 10%. I didn't buy more on that day. I really wanted to, but I'd already bought so much that I was like, let's pause in case the market tanks again. And then it ran back up 5%. So it's just a solid company. It's just been doing well. It's a sector that I like, that I think is going to do well in the long run. And I mean, even with trade wars and, yada, 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 all the stuff going on in the market, we're going to need fuel. And I don't really think the U.S. has an infrastructure to drill enough to supply everything on our own. And Canada, we've always been in on decent terms with them, better than Mexico, I would say. Again, let me tell you, I'm not like some foreign expert. Foreign expert sounds kind of funny. Foreign policy expert or anything like that. This is just, from what I understand. So most of what I know about how it relates to the stock market, I will say. But we're going to look into Enbridge's website. Let's see all the data they provide and find out if this is a stock for you. A very solid website. Nothing too insane, but I don't mind it one bit. So we're on the ENB's website. We're going to go to the dividend and common shares section, and we're going to click read more. Now, here's a really huge factor with Enbridge that I love, and it's the CAGR, compound annual growth rate, shows the rate in which the dividends are growing. Now, you don't want your dividends to stay stagnant and the company to keep making a bunch of money because they should be paying some of that out as a percentage in the dividends. And so that's what CAGR kind of stands for. And so since 1995, their CAGR has grown by 9% on average over the last 25 years until this year of 2025, which is insane. 30 years. Is that what I said? 30 years. So crazy. It's just very hard to do. You have to really be careful with how much money you're giving out. You don't want to give out too much and force a dividend cut. You don't want to give out too little and lower your yield. And so this is really a good showing of this company's ability to grow consistently and with it pull the dividend up as the price grows, as everything grows. I also like how they focus in on this. It shows they put this right on the front, meaning they know that they're a dividend-focused company, and that can get a lot of people involved when they're able to see that CAGR being so absolutely phenomenal. We have a consistent track record of delivering annual dividend increases, and our continual goal is to deliver superior shareholder returns through capital appreciation and dividends. Ding, ding, ding. Dividend lovers, this is 100% for you. You also can go on here. We can see they do pay quarterly, I will say, which is a bit of a bummer. I like mine monthly or weekly. We have some of those now. They have not been performing well, but it is really cool getting paid consistently. So even though it is quarterly, we can live with it. It means our compounding is going to be a little bit slower, but that's all right. You can also go through, check out all the other information on Enbridge, and contact investor relations if you want to discuss things with them. You can always do that. If you guys don't know that, a lot of investment teams will like to talk to people, like to talk to potential investors, current investors, and all of the above. Thank you guys so much for watching. I really hope you found this both informative and entertaining, if not just entertaining. These are some of my favorite stocks, and again, I am a little bit biased. I'm not a financial advisor. This is not financial advice, but I do want to know what you guys are investing in. Do you own any of these? Are you considering buying any of these? Because the market has just been so crazy. I mean, I won't even bother telling you how much I lost last week because I don't want to start crying again on video. But either way, it's a good opportunity. We have to remember that and stick together as investors. We are all in this together. So again, if you found this helpful, don't forget to like and subscribe so you never miss future updates. And if you enjoyed this video, chances are you're going to like these that are popping up on your screen right now. Thank you guys so much for watching. I really appreciate you and all your support. Hope to see you in the next video.